Our board has today approved the financial results of ICICI Bank for the quarter ended December 31st, 2015. The bank has sustained healthy growth and strong operating parameters during the quarter. Our domestic loan portfolio growth was 20% year-on-year at 31st December 2015, compared to 11% growth for the industry as a whole. The growth in retail loan portfolio was 24%. The growth in domestic corporate portfolio was 15%. And a large proportion of the incremental lending in domestic corporate was to well-rated corporates in line with the strategy of the bank. The growth in the SME portfolio was 23% year-on-year at 31st December 2015. This loan growth was supported by continued growth in the deposit base. The bank's CASA deposits grew by 18% year-on-year at 31st December 2015. We added 6,198 crores to savings account deposits and 4,412 crores to the current account deposits. Our CASA ratio was 45.2% on 31st December 2015. Reflecting the strong funding franchise and the loan growth, the bank's net interest income, or NII, increased by 13%. The net interest margin was also healthy at 3.53%, about 7 basis points higher compared to the corresponding quarter last year. The non-interest income increased by 36% year-on-year to 4,217 crores in the third quarter. The fee income grew by 7% year-on-year, with retail fee income growing at a very healthy rate of higher than 20%. The bank made treasury gains of 1,442 crores during the quarter. This includes profit of 1,243 crores on the sale of 4% shareholding in ICICI Prudential Life Insurance Company to Premji Invest and its affiliates. I must mention that the profit on sale of the balance 2% stake in ICICI Life and 9% stake in ICICI Lombard General Insurance Company would be an additional 2,100 crores and will be recognized after we get the regulatory approval on these transactions. Dividends from subsidiaries during Q3 were 374 crores and exchange rate gains from overseas operations were 143 crores during Q3 2016. The bank's cost-to-income ratio was 32.2%. The bank continues to focus on sustaining the gains made in operating efficiency, driven by all our efforts on enhancing productivity and efficiency of our resources. As a result of the above trends, the profit before provisions and tax for the bank increased by 30% to 6,560 crores in Q3 2016. Now, coming to asset quality, the bank's net NPA ratio was 2.03% on 31st December 2015 compared to 1.47% on 30th September 2015. In this context, I must like to mention that the global economic scenario continues to be volatile and challenging. There is subdued growth globally. Divergent monetary policies are being followed in various economies. There is significant slowdown in China, devaluation of Chinese currency, and continuing decline in the commodity prices. And all this has implications on the corporate sector in India as well. India is, of course, relatively much better placed compared to other countries in the world, given its strong external position, given the government's policy measures, the government's spending in railways, highways, defense, etc., and the healthy consumer demand. However, the corporate cash flows and leverage issues still continue to be a challenge because there is only a gradual progress in cash flow generation from some of the larger projects, weak private sector investment, and the impact of global factors, including the low steel prices on the corporate sector in India. This decline in steel prices and demand is driven by slowing demand and rising exports from the rest of the world. Further, I must say that the Reserve Bank of India has articulated the objective of early and conservative recognition of stress and provisioning and has undertaken discussions with all banks in this regard. RBI has discussed loan accounts with various banks including us and asked banks to review certain loan accounts and their classification over the 2 quarters ended December 31st, 2015 and March 31st, 2016. In view of the above factors, the bank in the third quarter 2016 has gross additions of 6,544 crores to NPAs, including slippages of 1,355 crores from the existing restructured loan portfolio. Coming to our subsidiaries, the life insurance subsidiary maintained its market leadership position amongst private players and has seen an improvement in market share during the 9 months. The retail weighted average received premium for life insurance subsidiary grew by 11% year-on-year, compared to 4% for the industry as a whole, and therefore the ICICI Life's market share increased to 12.1% in these 9 months. The company made a profit after tax of 436 crores during the quarter. For the general insurance company, the gross written premium for our subsidiary grew by 21% year-on-year in Q3, compared to 13% for the industry as a whole. The company continues to retain its market leadership amongst the private players and has a market share of more than 9%. The profit after tax for ICICI General for the quarter was 130 crores. Our asset management subsidiary achieved about 22% year-on-year increase in profit after tax to 82 crores in Q3 2016. The company continues to sustain its market position as being the second largest mutual fund in India. The profit of ICICI Securities was at 55 crores in Q3. The consolidated profit after tax for ICICI Group was 3,122 crores in Q3. The annualized consolidated return on equity was 13.5%. The bank's consolidated assets were 8.95 lakh crores at 31st December 2015. The bank's capital adequacy ratio, as per RBI's guidelines on Basel III norms, continues to remain very strong. Including the profits for 9 months of 2016, the capital adequacy ratio for the bank works out to 16.74% and the Tier 1 ratio works out to 12.76%. I must also add that ICICI Bank has always been a pioneer in bringing technology-enabled products and services to the Indian consumers. We've always focused on leveraging the current transformational trends in technology to bring value to our customers. We continue to be the market leader in mobile banking with a market share of about 27 to 28% of the entire mobile banking transactions being done in the country in the months of October and November 2015. Our digital mobile wallet, Pockets, has seen over 3 million downloads with significant interest from non-ICICI Bank customers as well. Recently, the bank launched 2 new digital initiatives to simplify and speed up the assessment of new home loans as well as disbursements linked to construction stage of projects. The first initiative is called the Express Home Loans. This allows fully online approval on home loans to customers within less than 8 working hours. And this entire process can be run fully online. It's available to all salaried individuals. The second initiative helps individuals take home loans for under construction projects and get their subsequent disbursements through iLoans mobile application. So again, the entire disbursement process has been converted to an entire paperless manner. With this, I conclude my remarks and I'll be happy to take any questions.
Good evening, ma'am. This is Nidhi Rai from Bloomberg TV India. Ma'am, can you give us some details about the fresh slippages and are they majorly due to the RBI directive?
Well, as I said, that RBI initiated this discussion with the banks and asked for this early recognition of stress and provisioning over 2 quarters. So on that basis, basically our major addition has been on account of one large steel company. We have added that to the NPA, and more than 60% of the addition in this quarter is actually on account of the discussions with RBI.
तो मैम जितनी प्रोविजनिंग अभी तक आपको करनी थी क्या अब आप वो कर चुके हैं और अब इसके आगे हम देखें कि आगे कोई स्ट्रेस नहीं मिलेगा, जो अगला क्वार्टर आएगा या आने वाले जो भी क्वार्टर्स आएंगे अब कोई स्ट्रेस नहीं रहेगा?
जो प्रोजेक्ट्स और जो केसेस हमने इस क्वार्टर में रिकग्नाइज किए हैं उनके लिए जितनी प्रोविजनिंग चाहिए थी वो पूरी प्रोविजनिंग हम लोगों ने इस क्वार्टर में कर दी है। पर जैसा कि मैंने कहा कि डिस्कशंस 2 क्वार्टर्स पर स्प्रेड होते हैं, तो जो नेक्स्ट क्वार्टर में रिकग्निशन होगा ऑफ कोर्स उसकी प्रोविजनिंग नेक्स्ट क्वार्टर में होगी।
मैम क्या कुछ डिटेल दे सकते हैं, क्या आउटलुक रहेगा, कितनी प्रोविजनिंग आगे देखने को मिल सकती है? कैन यू गिव अस?
Well, I think let me just put this whole recognition and NPA thing in context. As I said, some of these accounts are lumpy. So if you see a large number, it also happens because of 1 or 2 large accounts. And the addition this quarter is mainly on account of one large steel company. But of course, there is the balanced set of accounts to be done the next quarter as well. But at the same time, we must understand that the banks are also working with various companies to find resolutions. We have been working, with the corporates to get them to sell their assets, their core assets, their non-core assets. Some of these resolutions take time, but I think many of these resolutions are underway. Promoters are finding new, promoters or new shareholders for their companies. Some of them are selling some part of core assets. In some cases, we are actually taking the legal route and recovering the money. So I think there's a huge focus on recovery as well. So as we go forward, while there would be recognitions, there would also be focus on recoveries.
And one last question, asset quality. अभी gross NPA इस वक्त I guess पिछले अगर जितने भी क्वार्टर से देखें 6-7 क्वार्टर से अगर कंपेयर करें इस वक्त अपने हाईएस्ट लेवल पे पहुंच चुके हैं. सो गोइंग फॉरवर्ड इससे क्या आगे सुधार देखने को मिलेगा? जो 3.8, 3.7% जो लेवल्स होते थे ICICI बैंक के, क्या वो आगे देखने को मिलेंगे?
देखिए आगे के नंबर्स के बारे में कहना कुछ मुश्किल है क्योंकि जैसा कि मैंने कहा कुछ डिस्कशंस अभी चल रहे हैं, ग्लोबल स्टील प्राइसेस किस तरह मूव होती हैं, बट उसी एस्पेक्ट में हमें ये भी ध्यान रखना चाहिए कि ग्रेजुअली जैसे एसेट सेल्स होंगे, सम मैनेजमेंट चेंजेस होंगी तो उसकी वजह से सम इम्प्रूवमेंट्स भी आ सकते हैं. सो देयर विल बी बोथ headwinds, tailwinds, but I think we'll have to take this into account and it's very difficult to talk about numbers of the future.
Good evening, Ms. Kochhar. This is Nisha Podar from ET Now. Bear with me, there are certain numbers that I would like you to please update us on. You did say 6545 crore rupees as gross NPA. That is the fresh slippage. Out of that, the 1355 crore rupees has been on account of restructuring?
No, out of that includes 1355 crores, which is a movement of an existing restructured asset into an NPA classification. So in fact, that's not a new stress asset. That was already recognized as restructured earlier. That has now been reclassified as NPA.
So how much is coming in this particular quarter as in the form of NPA by way of RBI's fresh guidelines that had been given to you?
It's not going to be fair to talk of exact numbers here, but if you look at the 6,544 crores, as I mentioned, more than 60% is on account of the discussions that we've had with RBI.
So what percentage have you taken as provision of the NPAs? Because 15% is the norm, but some banks could be taking higher. So if you could throw more light on that exact number on account of especially that one steel company, and I'll come to that in a bit.
The entire provisioning that was required for those accounts has been fully taken. So I think they have been well provided for in that context.
Is it upwards of 15%? Have you been extremely cautious?
Yes, it's upwards of 15%.
And you are saying that similar amount could really trickle into your balance sheet in the next quarter as well. So you have pretty much done 50% of what RBI had asked you to do in this quarter?
Yes, in that sense, RBI has indicated that you do the amounts over 2 quarters. So whatever was required for this quarter has all been done.
And one more question, you said one steel company. Now it's not a big guess for any of us because last quarter also we raised this question on SR Steel. Could you confirm that, because that will give us a lot of clarity about other banks' balance sheet and other banks providing this quarter as well. If that is an NP on your account, that means 5 by 25, which is in process for that particular company with huge debt. That means that 5 by 25 will not happen on that account now?
Well, I'm sorry I can't give you specific names of the companies, but I guess, you people should probably try and understand.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.